where each morning in the UAE 10:30 we take a stock on the market open in Asia and the direction of travel through the day. We see our favorite Monday morning quarterback back from the south of France, looking all bronzed up. Obviously didn't indulge too much, still looking fit as a fiddle. Omar Najia, Global Head of Derivatives at BB Energy. Omar, in your absence, of course, the markets went bananas and have ended up exactly where they were when you left. Your thoughts as we sit here on the last day of August through a turbulent, volatile month, on reflection as you come back to the trading desk, what does the month behind look like and what do you think's coming?
Look, I think basically when markets do that, they start off at a point and then go bananas and then basically end up where they were. It looks to me like a quote unquote correction. So I think basically for WTI at least, whatever happens in the short term, I think you have targets at $80, maybe 82, 83, something like that. So I'm actually bullish. Now, I think basically the stuff with the hurricane, you've got to be careful because all this hype about, people need to write stories and sell newspapers and clicks and all that kind of stuff. So it's more products impacted, so refineries rather than, because they get flooded, takes time to fix them and clean them and all this kind of stuff, whereas platforms in the Gulf, you just literally flip a switch once you get the people back on and that's it. So I'd expect so cracks, which we are long, basically I think will do well. All this kind of stuff. And, since I left, everybody was, Delta. And I'm sure now it'll still be Delta. But, the impact that I saw where we went was not much. I mean, people freak out about PCR, QR codes, and you have a pass and all this kind of stuff. But, you're stuck on a plane, it's jam-packed. And they tell you, yes, please, on your way out, please keep social distancing of 2 meters after having packed you in like sardines for the past 7 hours. So, and also in Dubai, you've seen the numbers drop off as we head towards Expo 20, whatever it is. I'm sure there's no kind of correlation between the two, but, I'd forecast no Delta or any of that stuff. And Pfizer wants to sell its vaccine, so they'll tell you like have a third one and maybe a booster later on, and how about one for Christmas and all this kind of stuff. But in general, from what I saw, people want to travel, people want to go out, people want to drive, people want to get back to offices, and people are. And so I expect demand to pick up, keep going. That's not to say that you don't see kind of corrections. Once this oil market gets into the, takes out the high and maybe gets into the 80 level, something like that, then it's going to be interesting to see what it does longer term. I think then we'd be set for a kind of a largest correction, either downwards or sideways, and then we see what happens. But in general, people coming back from holidays, optimistic, positive, hopeful, all this kind of stuff, looking forwards to Christmas. Another important thing, is the dollar index. Now, this dollar index could be about to have a major fall. It's trading about 92.60. And if it does have a big fall, then that could, in other words, a fall in the dollar, that could basically, the euro is trading 118 something. So it's just about to break to the upside. I don't know if it manages it, but I think yes. GBP as well. So if that dollar starts to fall and fall strongly, then that'll be a fillip for oil and for equities because they get cheaper in real terms. So I think quite positive.
Well, let's go across to California to Richard Redoglia, CEO of Matrix Global Holdings. Good morning, Richard, or good evening as it is in California and San Diego. We are closing out a month in which we started at $76, dropped to 65 on Brent, and back up to 72 and change where we are now. A lot of that, Richard, was driven by the expectation of the Fed. The Fed were going to taper, then they got scared and backed away, and with it, as Omar suggests, the dollar could fall and everything else could rise. Your reflections on the month and what we've had, are you as bullish as Omar as we finish out the month?
I went back and kind of listened to, I think I was talking last month about the same time. I think the Fed has no choice. The Fed is going to do what the Fed is going to do, and I think they're doing it. And we're seeing what they're doing, and which is remain as accommodative as possible. To tighten things up is something that's not in the cards, nor I think will they be doing it anytime soon. I think if there's any great pressure on the oil market, it's going to be a function of a recession. You know, it's going to be a real problem in the economic activity and oil will be a subset of the weakness that comes from that. I think, and I agree with Omar, I think this market remains steady in an uptrend. You know, the word that comes out every other sentence is COVID. And the reason it comes out, COVID comes out because it's the effect on demand. The other thing that comes out in every second or third paragraph is the macro change of climate change and what we're going to do about that. I think those really are the drivers in this market right now. But the one thing that really determines price is supply and demand. And it's where those two numbers come together. And I think we've talked about this many times before. So when we talk about the Fed, I think the Fed we're really talking about is the OPEC Fed. And it's their ability to adjust supply. I'll say it again. I think it's the driver that is taking in this, has changed this market. In my mind, something we've never seen in decades, which is demand for oil. We just saw the EIA numbers not too long ago. I'm going to read them off my screen here. Demand for oil was up 6 million barrels from July of 2020. That's 98.8 million barrels. Demand is still down 3.4 million barrels from 2019. That value, the Brent, I'm using it the 6 to 18 month Brent spreads. The 6 to 18 month Brent spread is a good spread to look at because it's showing you the view of kind of where the market is going forward. And that market is in backwardation. Never in history has demand been down year over year and a market remained in structural backwardation. And we're there now. And here's the interesting numbers. Listen to this. In 2019, that 6 to 18 month spread was trading $2.30. 2020 went down to $2.53. Right now, it's $3.93 backwardated. This to me is the key factor because what it's showing the importance of what OPEC and OPEC Plus really is doing. Their ability to meet, adjust supply against demand, which they calculate almost instantaneously, I think is the number one driver in this marketplace. And so to me, markets that trade down are just an effective way to get people short, to get them stopped out back on the upside. And I tend to think we're going to continue to see this market move sideways to higher with OPEC Plus leading the way.
Let's go to Bora Baraman in London, a managing partner at Hormuz Straits Partnership. Bora, is this still a market, despite what Omar and Richard have said, that's essentially caught in the Fed vortex? Free money, all assets rise. Money in outlook that the tapering was going to happen, all assets fell. This is not complicated. It's just simply don't bet against the Fed.
I think there's something to that. If I would elaborate, in the big picture, the Fed is always going to be this Sphinx-like entity trying to be very serious and not give too much away. And I feel that Jay Powell has done a superb job in his role as, I would say, figurehead. Right? I'm not saying the actions are correct, but as a figurehead, he appears very serious, and he's saying there's no substitute for careful focus on incoming data and evolving risks. This is some of the statements that came out of this virtual Zoom Jackson Hole last week. And furthermore, he hasn't been really talking about inflation. The main quote that I saw from last week from him was, I have it here, an ill-timed policy move. Unnecessarily slows hiring and other economic activity and pushes inflation lower than desired. So he wasn't looking on the upside risks. And today, with substantial slack in the remaining in the labor market and the pandemic continuing, so he has put an emphasis on the delta risk, it would be a mistake that would be particularly harmful to make an ill-timed policy move. So he's talking about tapering and bringing that forward earlier than required. And he doesn't see that anything that's happened in the past year or so would require that type of forceful action to slam on the brakes. That's his view. He hasn't changed his story, and the markets recognize that. Whether the supply chain disruptions are to be pinned on the Fed, I'm not sure. How do we resolve these logistics imbalances in the system? I think we'll be living with these for some time, because it doesn't seem to be sort of a policymaker priority to get ahead of these mismatches of supply and demand. Perhaps they're happy with that, right? And at the end of the day, in the big picture, you know, with COVID, what does Biden say about COVID? And what does the US establishment say about COVID? That it's a war against COVID. So we're in the middle of that war. We've just ended a war in Afghanistan. Who knows where Iraq and ISIS go? But historically, after these wars, you know, you've built up debt, and these are eroded through periods of inflation. So I interpret the actions of the Federal Reserve as very rational, and they've been very effective in actually nurturing the environment that we're living in today. And
essentially making it obviously the new normal in essence, that it's just kind of bore you to death with Powellisms that finally, you know, you don't want to hear the word taper ever again. Omar, bullish coming back from your holidays, bullish ultimately because the correction has happened. Brent dropped to 65. That's sort of given the new lease. You expressed some concern that the surge might be overcooked because of this Ida storm, but ultimately the correction has happened and now we move on from here. It's investable again.
Yeah, I think so. I mean, you know, what Richard was saying, and what I'm kind of echoing, is that, you know, you have, just like you have the Fed on equities, you have OPEC plus on oil. So, you know, there was a story, I think, saying that from Kuwait, saying that they might reconsider the output hike and all this kind of stuff. So they're clearly in price, price, whatever you want to call it, manipulation or price fixer, whatever you want to call it. So at the end of the day, I think the market is supported. I think basically that OPEC plus need higher prices, and when there is a need, there is a focusing of minds, and they'll do whatever it takes. And you know, what Bora was mentioning about wars, you know, I mean, every single war from let's go back to the war on drugs. That was a failure. The war in Afghanistan was a disaster. And the war on COVID is an even bigger disaster. So all we've had is basically one disaster after another. So, you know, you're also seeing, I think, with oil and oil markets, you're seeing basically this shift that we've seen for the last 10, 15 years, 20 years, where the pricing power is moving eastwards. And I think you're going to see that basically in equities as well. And I think you've had a great big clearing of the board, which is going on now in China, to reset the kind of rules going forwards for their companies and all the rest of it. But I think, with the kind of performance we've seen from President Biden, I mean, I remember, Sean, he was like supposedly your, knight in shining armor. Here comes Biden. But what a disaster. I mean, honestly, what a disaster. What a disaster. I mean, did you see this morning when he went to the memorial for the people killed in Afghanistan, he was checking his watch to see, like, is it over and can I go? And there's a lot of very, very interesting reports about, for example, the bomb blast, right? So from what I read, I don't know if it's true or not, but to give you a different kind of point of view, they're saying that a lot of the people who died were actually shot by bullets and shot from bullets from above. And they're saying basically that the US troops panicked and started firing into the crowd. So, there's a very big difference between bomb blast victims and victims shot with, with bullets. So
Not to get too off topic, nonetheless, Afghanistan exit is clearly a disaster. And let's flip over to California, and just to take note that all things relative, Biden was the knight in shining armor in the context of the lunatic who preceded him, and in that regard, he's hardly the perfect human being. But in context, he was the one I chose over the other guy.
Well, that was unfortunate that you made that choice, and I think.
Yeah, well, if I had the right to vote, it might have been unfortunate or fortunate, but ultimately it's irrelevant.
One of your votes would have counted. Ask your question. Go ahead, Sean.
Yeah, one of my votes that didn't count, but ultimately follow on from the slight tangent, but nonetheless the reality of it, that there is fallout for Biden. The fallout for Biden on Afghanistan has policy consequences. So that's one part of the question. The other part of it is Omar's earlier thoughts, and obviously Delta was kind of the boy who's screaming wolf, wolf, wolf. Ultimately, is Delta changing the direction of travel in the U.S.? So no. Biden fallout, Delta shutdowns, closures, and mask wearing, and whatever else.
I think Biden has proven himself to be, as I always thought, as an observer of politics, as large a fool as we've experienced in our political world in my lifetime. When a president goes to OPEC and says, will you please increase your oil production after shutting down the Keystone Pipeline and stopping drilling on federal lands? If you can put those two arguments together and give me a logical reason of why one should do that, then I'll give you $1 right now, because that is illogical to the extreme. When you start to add it all up then, and you add in this idea, as I said before, about climate change and 500,000 PowerPoint plants across the country, the refinery closures are now accelerating. The price of renewable credits are going up. Demand at one point is going to reach new highs. Refinery closures are continuing. We are going to be out of, in California, if you can believe this, they want to stop all oil production, as I said before, by 2045. We have handed the keys of the kingdom to OPEC. And we've handed it with a president who thinks he knows what he's doing and he doesn't. So not enough of the political issue there. The problem we really face is this window of time we're in. And this window of time, as I said before, is showing significant backwardation. It's not going away. The only way out of it is for OPEC to decide they want to ramp up the production levels. The Permian now is controlled by the majors. The majors has taken away the keys to debt being financed through MLPs to being controlled by Exxon and Chevron. And they are going to ramp that production up in an orderly fashion to supply the refinery systems. That is different than what we saw back in 2012, 13, 14, 15, when free money allowed MLPs to produce as much oil as they wanted. So in a way, we've lost that marginal barrel, which has put the pressure on OPEC. And if our leaders are asking OPEC to increase production, by the way, it's OPEC plus with Russia, who he's called a killer, I think you find yourself asking, what do we have to stand on? I don't get it. And I think the poor, this is them, and then bring this full circle. Remember, this is all about helping the most struggling among us, the most struggling, the people who actually need to put food on the table. What's the number one thing you can do to hurt them? Raise the price of gasoline. And I would predict,
he wouldn't be the first to ask OPEC to do something, and ultimately that it does fit into the box of multiple eras of delusion, perhaps. But nonetheless, it's only a year ago that or less that Trump was calling on OPEC to cut production, I think. Bora, coming back to the sort of immediate, OPEC are due to meet this week, OPEC Plus. The month we're closing out from an oil price point of view has been maybe the most volatile of the last year in terms of since the correction started, if you like. We had a swing of $12, I think, through the month. OPEC hates volatility. Are you expecting anything from them other than a rollover?
Look, I haven't been following the OPEC machinations very carefully, but
it's been incredibly silent, to be honest.
They can. The impression I have is they are seeking to raise production in a sort of orderly manner, right? Not sort of rush out the door. To also sort of pacify certain segments of their customer base. Actually, the most important segment of their customer base, which is emerging Asia. If you want to call China also part of emerging Asia, but definitely India is part of that. And India will not be happy with this commodity inflation, which will occur no matter what OPEC does, right? But at least politically, as a responsible supplier to the market, they can be seen to be gradually ramping up production. I don't think they will necessarily respond to these, desperate calls in the night from various presidents, but they will seem to say that it's part of the program, boys. Don't worry, we will be expanding production. The other point that I notice just from observing the market is I'm not sure that many players can cheat because the investment is not available for a lot of the sub-investment grade NOCs out there. Yes, Saudi Arabia and the UAE, they can really kind of shape the market, but I'm not sure what sub-Saharan African producers can do because the access to the investment for the upstream sector is difficult. Well,
they can only hope that the Chinese don't rip them off too much as they put $1 billion in their pockets. Let's go to the survey question and get a sense of what the rest of the room thinks about the continuation of this volatility. Brent started the month at 76 or so, dropped to a low of 65. And now finishes the month well above 70. We're opening this Monday morning in Asia, essentially little changed at 72.70. My question to the room is, do you expect to see a similar 10 plus volatility swing in September as we saw in August? I mean, are they going to taper? Are they not going to taper? That decision apparently is going to be again on the agenda come the September 20th meeting of the Fed. So you're going to have another cycle of speculation about the end of tapering, which will continue to be a disruptor. So what's your thoughts on a similar $10 swing in September? Yes or no? Welcome your thoughts on that. Looking forward, Omar, obviously moving into September, your thoughts vis-a-vis supply. Obviously, we had the Mexican disruption, 400,000 barrels. Now we have the Gulf of Mexico storm, 1.8 million. I mean, only for a few days or a week or so maybe, but ultimately a lot of constraint. What's your outlook for this volatility to continue?
Look, I think basically when basic markets zigzag or are volatile or however you want to look at it, those are signs of corrective. So when there's no trend, the market basically is consolidating or correcting. So the question is, are we going to head up or are we going to head down? And I think basically plus or minus in general, longer term, I think we're going to head up. I think we're going to head up strongly. The US, I mean, it's how can I say, I've said it before, but the world has told OPEC Plus that they are basically useless. They are not needed, and they're going to be quote unquote cancelled because we're all going to be green and get our energy from somewhere else. So when you say that to people, it's very difficult not to get them to concentrate on making as much money as possible before you show them the door. So I don't see why OPEC Plus does anything except look for higher and higher prices. And again, of course, no investment. Nobody who wants. How can you go to somebody and say, "Look, lend me money over the next 20 years because I want to invest in finding oil"? They're going to laugh. They're going to say, "Well, nobody's going to want that oil. So what's the point? We're not going to lend you anything." So what happens with markets that are basically that no investment, blah blah blah, is they get tighter and tighter, and prices spike. Now, that might lead to a fall in demand or whatever you want to call it. But till today, oil is the cheapest energy source by far. Wherever you go, electric cars, all are subsidized, et cetera, et cetera. You can't sell an electric car for like $2,000, $3,000, $5,000. They don't exist. So again, I think the West has its kind of blinkers on. I think the world needs cheap energy. And I think basically oil prices, because of this, green lack of investment, OPEC management, all that kind of stuff, I think oil prices are going to rise. So
you expect the OPEC strategy to be maintained and to continue to be sort of supportive of a tighter market. Richard, we're seeing inventories continue to decline. We've seen ultimately demand continue to be quite solid, and we're not seeing expensive supply come back. Shale's still on the sidelines here. So we're in essence putting the floorboards under this managed recovery, and eventually we'll have a floor that is based on fundamentals. Your sense of OPEC strategy going forward?
I said that, and what Omar said, I agree with, and I've made that statement for the last 6 months. I think this is a new game. We've never seen this. Information technology is moving more rapidly than we've ever experienced, even the past 3 to 4 years. You have Kepler, you have Genscape, you have everything being calculated instantaneously. And I think OPEC, to me, the surprise would be if the Delta variant gets a little more tricky, that they take production from 400,000 to 300,000. All it takes is one word. It's going to be just like Bernanke saying something, I'm going to raise interest rates. It's just a very simple statement.
Does that keep shale on the sidelines? You think the fact
that
I think
the thing about shale is, and I just said it earlier, it's in new hands. Remember, it's Exxon, Chevron. They've taken it over. Exxon's building an 800,000 barrel pipeline to Baytown. So it's its new North Slope or Brazil. Why go far afield when you can get on I-10 and drive out to your oil field instead? So I think that's really what we had, is that the oil in the Permian, and given what we expect, what we're seeing with the MLP model somewhat breaking down, that is, investment is an easy way to go. I think it means that the marginal supply is going to be less from the Permian, and it's going to take time for new shale finds to come on. Someone said China had some shale finds. That will ultimately be the problem with OPEC down the road. But I would think maybe over the next 1 to 3 years, we can see a sideways. Just quickly, looking at a chart, if you take away 2020, we've been between $60 and $80 since the end of 2017. So we've been in this range for a long period of time. The biggest difference is OPEC has learned its mistakes. It learned its mistake the hard way in March of 2020, and I think they've learned the mistake, and I think they're not going to do it again. I think
ultimately, I think although it's still sort of unnatural to say the word OPEC plus. It's sort of that extra bit you got to say every time. But ultimately, that's the new game in town, isn't
Correct.
it? You got Russia in the room and all the other stragglers. And with that, you've got the global piece. OPEC by itself was starting to look anorexic. Now it's got some muscle.
Perfect word. That's the perfect word to use. I think you're exactly right. They've got the muscle, and they're being told that their asset, which finances their livelihood, is not going to be needed in 7 to 8 years. And I think that puts the 2022 or 2023 to 2026 as a very interesting period for price. I think it might be the thing where you want to start buying refinery stocks now, right? It might be something where they're going to come back.
Yeah, I had a
into the
meeting with
fold.
Carlyle the other day, and they're very focused on the refining space. They feel there's still a lot to be gained there in the coming years.
Yes.
Let's go to the survey result and give Bora the last word today. Same volatility in September as August. 55 no, 45 yes. Bora, your thoughts, closing thoughts. There was Monday morning, the direction of the market. Everybody's coming back to work. Kids going back to school. Normality returning. Omar's back in the office. Reluctantly dragged out of the Sud de France. Your thoughts about where it goes now that all the professionals are at their desks?
Yeah, two thoughts. What drove this volatility in August? Are those conditions going to be different in September, October? Well, people are at their desks, but fundamentally, I think this volatility was there just due to the cross currents in the market. So I don't think those are going away. I think volatility is something that we're going to be experiencing for some time. As Omar said, these spikes will occur and then we'll find another level, but we're in very interesting times. I just want to give Richard and Omar 2 words to make them sort of appreciate the value of the Joe Biden presidency. Kamala Harris. So
True.
Makes me
That's so
nostalgic
true.
for Dan Quayle, right?
Exactly true.
And there is let's say we need to appreciate the position that we're in. We could be headed for a lot more volatility. Imagine that world.
Well, I won't even bite on that hook because there's so much to say. And that is that we've had many great presidents in the past who were novices as they stepped in the door and did amazing jobs. But nonetheless, Richard in San Diego and Bora in London and Omar here in Dubai, thank you for your thoughts. I also will just echo the thoughts on volatility. I do think we are in a transition period, trying to get back to some normality, whatever that is. And as long as this sort of taper, not taper, cutting off all of the subsidy to the unemployed and the furloughed workers and the end of all of the government fiscal stimulus. And over the next 4 months, we're going to see, I think, that transition of trying to find a new path will bring with it volatility. And with it, all of the very exciting speakers that we're currently showing off on the webinar page at the moment. So obviously that October 4th, 5th forum coming soon. Thank you guys. Have a great week. Every morning, 10:30, we'll be here to try and dissect what's going on. Thanks, Omar, Bora, and Richard, and everybody else for joining. Take care. Have a good day.
Thanks, Sean.